But whom do we have now? Well, Raamdeo Agrawal. Yes, the man as they call him. Ramdevji, always a pleasure to have you on ET now. I'm looking at your numbers for the quarter gone by, and while year on year there is a surge in profits, surge in revenue, growth in AMC business, growth in brokerage business, growth in every other vertical, but quarter on quarter there is a drop. Now, for a business which should not have a cyclicality, why is there a drop?
Yeah, because see, typically we look at only year on year. Sequentially, because of something or other keeps happening, like in the capital market business, there is a bit of drop because of all the changes were made in uh, this options and futures. So that it hit us for 1.5 months. I mean, second half of November and full December. So clearly, there is a sequential drop in that business, which is 60% of the total business. So yes, to some extent, there is a what do you call sobering effect because of that. But otherwise, I think operating year on year has been very strong, almost 48% growth year on year. So the momentum which which is built across the 9 months is very high, and same momentum we are seeing even for the current quarter, which is Q4. So operating side, I don't see any slackness in the momentum.
But just to talk about the broking business, Ramdevji, you alluded to a weakness which has come there. Volumes are already low. Exchanges have gone on record and they've said by the time the new SEBI law is implemented in totality, volumes may go down further. So can I say that the stress in the brokerage business will continue because it accounts for 60% of a business and that business could contract further?
So it's an emerging situation in the sense that whatever changes are there, that is taking effect and it is having its impact. But since ours is a lot more cash business, and of course we have a very large options business. Almost 50% is options revenue, futures and options revenue, and 50% is cash. So the impact on cash side is less, and the impact on option future is a little more. But I mean, on the blended basis. But what is happening is that when we look at the whole company, the growth in the rest of the businesses, rest of the other parts of the capital market is more like 60 to 70%, whereas the growth for broking business will take a beating, and maybe for a quarter or two it could be lower sequentially, but year on year it is still high.
And the mutual fund business now, amid market volatility, the selling in mid cap and small cap stocks, do you think the asset management business could also see some impact, especially inflows into small cap, the new NFOs which you've launched, the PMS business, could that really take a hit also?
And capital market business is always to predict anything is hazardous, I would say. But we had a brilliant December quarter. I mean, our net flow for the quarter, if I'm not wrong, was upwards of 25,000 crores just for a quarter. Before that quarter, it was, I think, 15,000 crores or something like that. So we had the record run, and so that flow is still on. So yes, it can. I mean, always these kind of things don't continue forever. They do subside, but you see, what is happening is the revolution, Nikunj. Broader thing. I mean, apart from Motilal Oswal, what is happening is that there is a first time the private capital flows, the risk capital is coming into the country, and the market is participating in unprecedented way, 3 to 4 million customers every month. So market is clearly horizontally expanding. The pace of expansion, say if it is say 2 or 3% per month on month, that can come down to 1.5%, or maybe for some time zero. But I would say year on year expansion, to say anything about in this fluid environment, to talk about a quarter on quarter is very tough. But if you ask about the broader macro kind of a theme, I would say the year on year 20 to 30%, 40% growth of the industry itself is clearly visible. Now, whether we'll participate, we'll get same market share, higher market share, that is a matter of execution. So I would not look at too much into one quarter here and there. But I think the expansion of the market, irrespective of what is happening to mid or small cap, of course, if they're frothy, they are correcting. So last year, mid and small cap dominated funds, they beat the market big time. Like market did 10%, they did 30-40%. This is the year, my sense is 2025 will be the year when actually index will beat all these funds. You see what is happening. I mean, today it was very hugely contrast in the sense that one side the broad large index is up 1% and other indices they were down by 2-3% or maybe 4%. I don't know what exactly the closing, but so that's the kind of contrast we had last year when everything was working very well. Index was very slow, but the market actually was doing very well. Current year market is not doing well actually, but indices are doing very well. So it's a contrast.
Now, markets, Ramdev ji, are big reason why IPOs have done well. IPO business is important business. Given how market conditions are, could the IPO business for you take a hit? And do you see that getting impacted in terms of your next 2 quarters?
It's a dynamic market, and capital raising has been very robust, very consistent, week after week, and valuations are also moderating. So what is happening is that the primary market is taking cue in terms of valuation from the secondary market, and they are giving 20-30% discount. If the secondary market is coming down by 10%, obviously the IPO price is also down by 10 to 15% from whatever it would have been. So clearly there is a continuous dynamic adjustment. At some price, promoters will say that I don't want to do it, and that will be the bottom of the market.
So how would you rate the current environment? I mean, valuations are not very cheap. FI outflows are strong. There is a fear of Trump war in the world. Uh, these are market conditions which in a sense are making everybody rethink and reassess their allocation to equities. So what would you in a sense characterize are the key, if I would say, key features of the current market environment for equity investor?
So, Nikunj, I mean, we have seen all this global geopolitical and all. It is very, very tough to fathom. I see two, three things. One is where the corporate earnings are going. You know, if the corporate earnings are robust going forward, I mean, company by company, industry by industry, or aggregate as a whole, I think we have nothing to worry at 18-20 P multiple. That's the average. 18 to 20 is the average for the indices and for the market as a whole. But if the companies are at 100 P multiple, 120, of course, they are in a big danger of dramatic correction in their valuation. Now, valuation correction can be two ways. One is the actual drop in price, and second is the time wise, when the earnings pick up and the stocks don't respond. So both of them will happen. All kinds of action will happen. But if the earnings pick up, and I'm optimistic that in next 12 months, particularly in the first half of next year, the government expenditure will be absolutely normal, and budgetary allocations will be larger, and hence I would think that starting next year there won't be any elections, so there won't be any slowdown in government capex, and by that time even the credit flow, which was very constrained last year, would be under the new regime would be somewhat better, and we are seeing those signs. So I would think it takes time. It took time for the economy to slow down. I mean, what restrictions were taken, say 8 or 9 months back, is showing up now. So what actions you take now, the real impact will be visible after 6 to 8 months. But I would think the second half of 25, 26 should be a bumper earning cycle.
You mentioned a tilt towards large cap stocks. Could that be a big message from Raamdeo Agrawal that the party in small and mid cap stocks is over and the store of value has now moved to large caps? And it's not that the first time, Ramdev ji, we've seen this kind of an environment. I distinctly remember between 2016 and 17 and 18, there was a time when only a handful of large cap stocks started outperforming and the rest of the market either was down or was an hibernation.
I would think that broadly what you're saying is the direction in which I'm saying, but I would say much more specifically the where the earnings are there, earnings growth is there, and the valuations are reasonable, even if it is a mid cap. But if valuation is right, there is no stigma against a mid cap or a small cap. If the valuations are right, they'll also fly. But as a group, right now valuations are far more reasonable in banking stocks and some large caps compared to mid caps and small caps. So clearly, a broader move would be a lot more large cap centric than mid and small centric.
Raamdeo ji, you've been a big votary of digital business. And the fact that you've just launched Motilal Oswal Digital NFO Fund also. What do you make of this disruption which is happening in the digital world? I mean, if Chat GTP can be overnight challenged by DeepSeek, I wonder what will happen to the existing digital businesses in India.
Yeah, I mean, see, actually, what development yesterday you saw, that will actually help digital businesses in India. Because if, say, AI was to be used by one business or other, everybody will use it. And if it was costing X, now it will cost, say, 20-30% of that. So it will actually help. If you see yesterday in US move, I was watching it, actually only chips companies have gone down, but the chip user companies have gone up. So our businesses, they are the chip user rather than chip makers. So I would think that this is a robust business and very scalable, very friction free. And I mean, yesterday's move doesn't that much impact, but I would think the broad growth, growth potential of this business still remain intact.
So how does your QGLP framework works here, Mr. Agrawal? Where in this market right now there is good quality available at a reasonable price where you can predict long-term growth?
Nikunj, the character of the market is very different from what we have seen in last 40 years. In last 5 years, market character has changed from say traditionally, in say 40 million demat accounts, your 35 million will be old and 5 million will be new. Now in 185 million demat accounts, only 40 million is old and 145 million is new, who have not seen the decline in the market or deeper correction in the market. 15-20% correction is very, very normal order of the day correction in any market, you know. So if that kind of correction is there, I mean, of course, individual stocks might have corrected more, but I think portfolios have corrected more like 12 to 15%, 17% kind of thing, which I would say is quite deep, but yet it's not alarming for the amount of money people have made in last calendar itself.
So if Jan 2025 is the starting point, which is where we are, on a 3-year basis, do you think both mid and small cap stocks can give a double-digit CAGR return?
See, what I would say is that if you have a well-diversified portfolio, on a 5-year basis, you should expect from the current levels, you should expect doubler of your portfolio. That is what now, whether it will be 1 year will be flat and next 4 year will be good, or for next 2 years will be flat and next 3 year will be good, that I don't know. This year itself will be bumper. We don't know. So it is very, Nikunj, actually it is very tough to say anything, even from the higher the market or even from a corrected market like current level, that what will be the actual performance in next 1 or 2 years. But we are committed for longer term, and my expectation from my own portfolio is always doubling in 5 years. I mean, sometimes it does 25% compounded, sometimes it does even 30%, and sometime between 17 to 20, it did very badly. I mean, it was actually more like 12-13% only.
All right, so a very important question, perhaps relevant and something which everybody wants to understand. Your thoughts on this. A lot of investors and traders, I won't use the word lot, but majority of investors and traders who have bought stocks because of tip in the lift, not because of insights. For those who have a very large exposure to small and mid cap stocks, they are now on the receiving end of the market fall. What should be a basic approach? If you are in a stock which you don't understand, if your mid cap stock has fallen 15 to 20%, what should one do? Take a hit, get out, raise cash, or move to large cap? Because you'll appreciate the spirit of my question, Mr. Agrawal. Capital is limited with everyone, and for those who are losing money in their portfolios, how should they approach it now?
Yeah, so they themselves are portfolio managers. They've decided to be portfolio managers, whether with the adequate experience or not. They have decided to get into. In fact, yesterday I was flying and my friend asked one of the air hostess. She was saying that she not only does SIPs, she also does direct stocks. I said, God bless her, because doing this direct stock and with a very little competence, it is, and they don't have time. It is very tough to what you call beat the market or do very well, and it brings all kinds of concern in your mind. So I would think that they should examine whether they're in the right kind of a trade. Can they handle direct stock portfolio? Otherwise, you have brilliant managers all over, and they can take care of it and still meet your equity allocation objective.
All right. So give us some pockets then, Ramdevji, where you think valuations are looking reasonable, where you think that if one is a genuine investor, if you can digest 10-15% volatility, your time horizon is 2-3 years, what is looking good and attractive in this market, and where one do you think one should be buying?
Yeah. See, valuation is a moving target, Nikunj. I mean, today, say, digital companies might have corrected by 25%, 30% also. Okay. So, what level is the right level that you can decide? But the sectors don't change. I mean, I'm telling you, the spots where growth is there, best thing is after 15 days, you'll get to see all the results. And you can go and see where exactly the big sales growth is there. About 25% sales growth is there. So I would think digital businesses, number one, capital market businesses, number two, then energy transition businesses, slightly cluttered right now, but energy transition business also looks good. So you have to, and then there'll be some new what do you call development about particular businesses like West Management and all. So but then in larger segment, I would think that these are the segments which have done well in last recent past, and they seem to be they're in a secular move. Capital markets, your uh, 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 digital businesses, I mean, they are growing at like upwards of 25-30%. And at current prices, I mean, see, once they become busted growth stocks, like when they get busted in terms of their valuations, irrespective of their performance, I think that is a time to go and pick it up. And that's what is happening right now. A lot of these stocks are getting busted.
Now, Mr. Agrawal, so let's talk about something which you always advocated. Buffett has told us something which I think should be adopted by everyone: buy fear and sell greed. Right now there is fear, greed is over. Is it time to buy them?
You said it right now. Now fear is emerging. As I said, in the flight, somebody asked, "Bazaar kab rukega?" So now the fear is slowly getting in. So I think this is a time to be really energizing yourself, getting yourself to buy into good stocks which you missed out last time, and now the same stocks are available 25-30% lower. So if you don't buy now, then when do you buy?
Mr. Agrawal, appreciate your time. Thank you for joining us. And once again, thank you for being ET Now's knowledge partner on the budget day. And we look forward to meet you on the budget day.
Sure, we'll be there. Thank you.
If you like this video, then like, share and subscribe to ET Now.